Hey everybody, welcome to the daily analysis video. It is April 22nd here on a Friday evening. I'm your head market analyst here at Trading Capital. Let's dive right into the markets. Starting with the S&P 500. What a tremendous sell we saw in the markets today. It was literally one for the history books. The consistent downside pressure all day long is something to be really admired. And the way the intraday selling has taken place, we will dive into the 10-minute intraday chart just to break it down as to how the selling commenced, and it basically never stopped all day long. Now, this is probably coming on the back of the fact that now we have in writing again from the Federal Reserve, Jay Powell insisting that a faster tightening process is now needed, and they recognize that it's needed due to the fact that inflation, but their plan still has not changed. That's why here at Trading Capital, we accumulated a lot of shorts on this market, and it's for the reason as to what we saw today, the downside pressure. This is why we're accumulating shorts, because this market is going much lower, and the fact that the plan didn't change from what their last Federal Reserve meeting, it shouldn't have caught investors by surprise. But it certainly seems that way that it did, and perhaps it's more retail money, but the volume today was about 110 million on the spiders, and it certainly was tremendous downside pressure. On the day, the spiders fell 2.77% and then a whole bunch in the after hours. So I actually think on the day it was down closer or over 3% on the spiders. And how does the spiders move 3% down? Well, let me just pull this up for you. When we look at the mega caps here, you have roughly 32 mega caps. 100% of the mega caps were all in the red today. There was no shelter. When you recognize on this list that 100% of the mega caps were in the red, so that's your biggest companies, your 32 biggest or your 37 biggest companies, and then you take a look at your large caps, and it was pretty much the same, except for a few hiding spots like Lockheed Martin, let's see what else, NOC there, SLB, Twitter, Elon Musk holding that one up, but very few and far between. I did a calculation, and 100% of the mega caps were down today, and about 97% of the large caps were down today. So this is why there's so much pressure on the markets, because now these high valuation PE stocks are starting to be recognized in the face of rising inflation and tightening monetary policy. But this was to be expected. We knew that the Fed was tightening policy all the way back here. This is why you should have started positioning yourself to the short side. And that's why when you notice this type of volatility, when you have this up and down price action, notice the difference compared to, say, this beautiful trend, the slowly upwards trend. Sure, you had a little bit of down days, but nothing in the magnitude as to what we're experiencing in this first and second quarter of 2022. So the S&P down close to 3% on the day. You can clearly see here it's below all the key moving averages, the 50 in purple, the 200 in this light turquoise blue, and it got rejected completely off of those key moving averages, which shows you that this market is not healthy. The fundamentals behind it point to a substantially lower price levels. But let's just take a look to see what happened today. So today you came into a couple key support levels. Look at this trend line here, connecting pivot low to look what you just hit today. So that was really your only support that you came into today. You can argue that there's a little bit of support here at the gap fill which you came into. Obviously that gap was filled, but it was kind of a breakaway impulse move that started this overall big robust bounce. So you are into a little bit of support. The question is, do we hold that? If you don't hold that level of support, then essentially there's not really much support other than, say, this pivot here and then ultimately the double bottom. So right now this is your first level of support. I do think we are potentially into a small oversold short term, maybe a 1 or 2 day bounce on Monday, Tuesday. So I do think the markets have some sort of a relief from the sell pressure. But if you break that first support, then you head to this intermediate, then you head to this major. The big question is, will you break the major support? Let's just take all those lines away for a second. And another thing I want to show you that is really fascinating, and it's just something that you have to be aware of as a market technician. There will also be some extra support. Let me just look here, right around here. Okay, so you will have some support pretty much in and around these pivots. Like I said, in and around this zone, there will be some minor support with this trend line over here. But the thing that I want to show you is if we go to the monthly chart, and a lot of people try to neglect the monthly chart, but it's really gives you great insights because it's such a longer term trend and viewing of as to how the price action is unfolding. So every candle here represents 1 month of trading data. And notice where we closed today. So there's still 6 days left in the month. But the scary thing is that when you draw a trend line from that low, this was your lowest point. Your closing point on the month was this candle here. Look what you just broke today with the sell-off on a monthly basis. We have not closed below this yellow line on the monthly basis for 1, 2, 3, 4, 5, 6, 7 months now. So this is a key level. If we do not recapture this 4,300 level, give or take a few, then there's tremendous downside ahead. So just keep that in mind. I do think the markets go lower, but the fact that we broke this on a monthly basis and it's looking like we're going to close below it and confirm, mind you, there's still 6 days, so the markets could be saved, but you just have to be aware that the longer term patterns are looking bearish as well as the shorter term patterns. And this is why we are accumulating short positions. Jumping over to the Nasdaq, very similar. We were analyzing this bear flag pattern and look what happened today. Triggered, broke down. So we were discussing this. You clearly should have been prepared for a breakdown in this pattern. We had this drawn in our previous videos. Again, we've been accumulating quality shorts. Teslas, Amazons, we covered a whole bunch of shorts yesterday. Could we have held them a little bit longer and squeezed out a little more profit? Probably could have, but nonetheless, we are raising significant cash to now start looking at accumulating beaten down names in technical areas that will position us well for the next bounce. And that's why I love these bear market bounces. And I do think we're heading into a bear or a recessionary period, but these recessionary or bear market bounces, so to speak, are so powerful. I mean, the fact that you can play this as a trader, and then you're right back down over a couple weeks to the same level, it just provides awesome opportunity. So clearly see the bear flag played out tremendously. Now this bear flag does have more downside. The completed bear flag will put you down into these double bottoms area. There's not much more support on the Nasdaq. So that's going to be your key pivotal area. Will you take this out? Time will tell. Certainly it looks like you're going to test that triple bottom zone. I'm not a fan of triple bottoms. I prefer double bottoms because the more you hammer off of a support line, the weaker it gets. And we certainly have hammered off of this once, twice, and now it's shaping up to be a third time. Nonetheless, I do think we are in for a small short-term bounce, but next week we could definitely challenge this triple bottom area on the Nasdaq.